and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next hot thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was and I just follow their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
It just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable, it's comprehensive, and it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Well, hello. Good morning to everybody. Hope you're doing fantastic today. It's Jeremy Whaley here from Maestro, and welcome to our live stream today. I think everything is working today. So sorry about yesterday. For those of you who know me, you know I absolutely hate it whenever my technology isn't working right. And I try to pride myself on putting a smooth product together. But I've had to go back to the old system because the new upgrades that I made were creating too many conflicts, and I got to solve it. So anyway, we're here. I hope everything's going to work just perfect today and ready to get into what will be day number 9 of our Pick Winning Stocks Challenge. And specifically, we're going to go a little bit deeper into strategy today. And that's where we're going to spend most of our time. Now, if you've not liked and subscribed on the channel here on YouTube or over on Rumble or on Facebook, then please do so. And I think by this time next week, we'll also start going live over on LinkedIn as well. So wherever you are out there, you can join us and, follow. Keep up with everything that's going on. All right, before we get into the Pick Winning Stocks Challenge, let's get over to the market and do a little bit of a market update here and see where we are. As I've been telling you, I think I said it yesterday. If I didn't say it yesterday here, I said it in our profit picks on Sunday evening. Oops, let me get on the right chart here. This is the Dow Jones Industrial Average. And as I know I said Sunday night, I think I said it yesterday, once we start hitting these support levels, we would start bouncing and we would start seeing some response. And that's exactly what we saw yesterday. We spent some time talking about this long leg doji. With all the chaos of yesterday, I wouldn't be surprised if you totally missed that. But it's a long leg doji candlestick. Actually, it's technically a spinning top because very, very small, slightly higher close than we had open. But it's basically a doji. It's that long upper shadow and long lower shadow in that candlestick. I'll draw it out here. It's about this big too. I mean, it's just huge. It looks like that right there. And what it shows is it shows incredible indecision at a specific price point. If you look at the price point for it, where is it? Well, boom, it's right there on that pivot point. One of those purple lines we got on there. I don't put my purple lines in for randomness. If you come back just a little bit here, you're going to notice, oh yeah, that was a major turning point, a major pivot point, which by the way, sets us up great for our strategy today. But what it showed yesterday is it showed that there was a lot of indecision at that decision point. Pivot points, support and resistance, are turning points. This is the place where the buyers and the sellers make decisions. You have all this duking it out between the buyers and the sellers. Are we going to sell? Are we going to buy? What's going to happen? And what we saw yesterday, the news story yesterday was that we were down 300 points. That was the headline at the end of the day. Dow Jones closes down another 300 points. Oh, they missed the story. They missed the news story because here was the news story. The news story was not that we closed down 300 points yesterday. The news story was that we were up from the lows. And I'm going to give you a specific number on that. If you hover over your candlestick here, you can see that the low for the day, 36,611. And we closed at 37,965. Now, wouldn't it have been a much better news story to say market closes 1,300 points higher than the intraday low? Wouldn't that have been a better headline? It would have been, and it would have been a more accurate headline because that's exactly what happened yesterday. We sold off to 36,611 on the Dow Jones. At the end of the day, we had rallied and closed at 37,900. And today, we're up another several hundred points. Now, if you look at the candlestick today, you say, well, that's a big red candle. That must be bad. No, it doesn't mean it's bad. What it shows is it shows that we opened the day. Where's my pen? We opened the day by gapping up to here, which was, again, another pivot area. And then we traded higher. And then the bears came in and we traded lower. We're showing more indecision again at a pivot point. Now, this is normal. This is normal behavior in an extreme market condition. If you were trading through 2008, which some of you were, probably most of you weren't, but if you were trading in 2008, you remember the extreme volatilities we had and the way that the market shaped up from there. And we would have these days where we're down 5, 6, 8% in one day, and then it would come right back the next day. And that's the kind of volatility that you're experiencing right now. So what does it mean for us moving forward? Here's what I expect will happen. Obviously, there's no proof. There's nothing that guarantees this is exactly how it's going to flow. But I think we're going to continue indecision right here until we get up to and connect in some way with these moving averages that are falling down here. Will it be a direct, we're going to rally and then make contact with these moving averages? That's a possibility. Or will it look more like we're going to go sideways until the averages catch up? That's a possibility too. Either one is a realistic possibility. I think you're just going to see a whole bunch of this intraday volatility. If we come over and look at the VIX, which is the volatility index, this is a measurement of S&P options implied volatility. You can see that we actually peaked up here yesterday at 60. Okay, now we're rising a little bit today, but all things considered, that was a high peak that we came way off of, 20 points of intraday volatility there. If you were here last week, you remember me looking at this and pointing out that VIX really doesn't get that high very often and stay there very long. It's usually just a couple of days, and that's exactly what we're seeing happen. I pointed out last August where we had another series of movements like this, and look how fast it resolved, okay? And I think that's another similar situation to what we're seeing right now. In fact, speaking of August, let's go back and look at that. That was actually August 5th. So I'm curious what was happening on August 5th. I vaguely remember. Yeah, this is where we were last year on August 5th. And you can see, even though it appeared to be a fairly bearish move at the moment, that's August 5th right there. Let's just get some numbers in here. So we moved very quickly from 41,000 down to 38,800. So it's about 3,000 or 4,000 points. Maybe more like 3,000. Not approaching 4, but it was a sizable move. If you go from 41,000 to 38, going off of quick math here, that's about 7-8%, pretty quick, if I did that math right. I may not have done that math right. I was not a math major, not great at the mental math. But anyway, the point is that was a very rapid bearish move. What did we do? We found support in the location that we'd been knowing as support, and we rallied from there. Okay, so that is your typical pattern. The typical pattern is that we will have a lot of chaos. The news media gets all chaotic about it, starts freaking out, finds a news story to tie to it, and then suddenly everything starts bouncing and people say, what was the fuss about? What was the hoopla about? I remember back in 2015 when this happened in China. Overnight, literally overnight, some of you might have even been following me back then. Overnight, the media just decided that the Chinese economy was terrible. And we woke up to futures that were down 800 points in the morning, and it just continued following. They even turned on what they call the circuit breaker, which is basically paused trading for a little while. And all of this was blamed on the Chinese economy was doing terrible. But the thing is, if you looked at the Chinese economy chart, it had been in a decline for almost 9 months at that time. Why did we wake up this particular morning and everybody decided that this was the day we're going to get scared about it? It made no sense. And it looked very, very similar to this. It looked terrifying. Everybody was absolutely freaking out. The bottom was falling out of the market. Volatility went through the roof. And within a week, everything was resolved and we resumed our bullish trend. It's just the way things work out more often than not. Now, what I'm looking for to make sure that we're not in an actual bear market, which we very well may be getting into, but I don't think that's the case yet. What we're looking for is we're looking for one more rally and then a continuation of the bear trend. And if we have that, then we can say we're actually in a bear trend. We're actually in a bear market, and we're going to really double down on bearish strategies. Right now, I think we're just in a really volatile market. Right now, I think it's just going to be a lot of ups and downs until all this shakes out. And of course, they're going to blame the tariffs, because what else is there to blame? There's nothing else to blame. So we're going to blame the tariffs. That's where we are on the Dow Jones. Take a look at the S&P 500. It's a very similar story, very, very similar story. And you can see it here. Sold off to our intraday low yesterday, sold off to a pivot area. Got to find it here. It was back here. There was your line. NASDAQ, same situation. So all three of these pretty much, we talked about this yesterday. The NASDAQ is the most bearish of the three. It's been that way. We were trying to make the argument that maybe it was getting into a consolidation and going to channel up here. Obviously, that broke down. That argument did not hold. Once we dropped below our support levels here and continued, that was clear where we were. Notice we were basically at this pivot. We gapped below it and hit kind of a known pivot, but not a very strong one here at 14.8, but it rallied immediately back to the main pivot here around 15.5. And that has held so far. So we're just kind of going to probably see it wiggle and waggle here back and forth until we build a little bit of support. And then we'll start to see the buying pressure come back in. I think we may have flushed as much as we need to. I really do. I can't prove that, obviously. There's no guarantees in the market. I wish there were. But I can say with pretty good confidence of what I'm seeing. Let's talk about crypto. I don't talk a lot about crypto in my analysis, but I'm going to today. Here's a picture of Bitcoin. You notice that Bitcoin is continuing its bearish trend. And this is an actual trend continuation that I wanted to address. We saw the consolidation that happened up here. I talked a lot about this last week in our Pick Winning Stocks challenge. So there's your consolidation. It dropped below it, rallied to the bottom side of the pivot, made a new lower low, made a new lower high. That is, by all definitions, a bear trend, and now we are continuing that. Your next target for Bitcoin is going to be 72,000. Don't be surprised when it gets there. Don't be like, oh my goodness, I never saw it coming. You did. I just told you it's coming. 72,000 is the next target for Bitcoin. If that does not hold, don't be surprised to see it at 60,000 or even all the way down at 52,000. At that point, some of you will be like, oh, crypto is just terrible. It's not terrible. It's not terrible at all. This is the framework. We talked about this last week with your support and resistance, building your grid. This is the framework for Bitcoin. This is the structure that it moves within. What's beautiful about this, it's not terrible, it's actually excellent. What's beautiful about it is it's defined trading behavior. It's not just random. We see exactly where it's going. It's trending. This is your next target. It'll trend down to 60,000. If 68 to 72 does not hold, it will move on down to 60. If that does not hold, it will move on down to about 52. And somewhere in here, it will build a base. And when it builds that base, eventually the trend will rotate. It'll go the opposite direction. It will look exactly like it did back in October. And that will be your buying opportunity for Bitcoin. That's when you're going to want to load up on Bitcoin. And that'll give you probably another 100% gain, honestly. That's the beautiful thing about crypto. The beautiful thing about crypto is we constantly have 100% up, 50% down, 100% up, 50% down. You can make a fortune doing those kind of trades. Where crypto becomes nauseous, where crypto becomes something that people really hate and resent, is when you buy at 65,000, you ride it to 108, and you ride it right back to 65, and you're like, I don't get it. And you're frustrated because you didn't know when to get in, you didn't know when to get out. Okay. Actually, if you bought at 65,000, you did pretty good. What's really frustrating is those of you who may have bought up here at 100,000 and you ride it down to 65, then you're like, oh, this is terrible. I lost half my money. Or maybe you just were on the wrong side of the trade. Ethereum continues its bearish move, just dropping like a rock. I'm not sure if there's a justifiable reason for it or if it's just trading behavior, but we are just moving through the grid down here. It has continued its bearish move. Nothing has changed there. XRP, same thing. I've been telling you I would make some updates on XRP when it was time. Here's the updates for it. We absolutely are destroying this support at 180. And by destroying, I mean, we're like sitting here just hanging out like, hey, can we hold? It did hold yesterday. The downside pressure on that support level is incredible. We are trying, if you look at your momentum indicator, your stochastics down here, it's trying to build that support and trying to get going, but I'm not sure it's going to be able to hold. If the downward pressures continue, it's probably going to drop below that. If you're holding on to your XRP bag, I might be putting some stops in. Same thing with XLM. We've already been out of this one for a while, but you've got your next target for XLM is going to be 20 cents. That'd be a good place to start picking up some more XLM. And, thankfully, I think this is great. Solana's down to 108. We were looking for a great new buying opportunity. It is continuing its bearish trend as well. So how cheap will we be able to buy Solana? I can't tell you, but I'm telling you, next buying opportunity is going to be a whole lot better than the one that people were taking a couple of months ago when people were buying at 220. We've already lost 50% of it. Next targets on this are going to be around 85.50, 85.60. And then we got a couple more that I haven't drawn in there, but there's quite a correction going on in crypto, and that means it's going to be a great buying opportunity here. Probably, I would guess, happening somewhere over the summer months, maybe into the early fall. But I think we're probably a few weeks for sure, if not a couple of months away from any real bottoms there. All right, that's my big picture market update. If you got any questions on that, type it into the chat. I will do my absolute best to try to answer it. Hello, Mia is coming in from Calgary. Welcome, Mia. It is so good to see you here. Kenya says, hey, from Nashville. Hello, Nashville, my own city. Let's see if we got anything happening over here on Rumble. We got a few people. So, hello, Rumble people. If you would put your location in the chat, that would be fantastic so we know where to welcome you from. Yeah. All right, let's jump in. Oops, I shared the wrong screen here. Sorry about that. That's how you know it's live. Whenever I'm talking to you and you're staring at a screen that I'm not drawing on, you know it's live. Or when I'm drawing on the screen and you're staring at me talking, you know I pushed a button wrong. That's how you know it's live. Because if it was recorded, I wouldn't let those errors go through. All right, let's jump into our Pick Winning Stocks Challenge, and let's talk about what I call the pivot strategy. Today's market overview is actually a fantastic setup for the pivot strategy. Yesterday, we started talking about strategy, and just kind of give you a quick recap. We said that strategy is how we play the market. Strategy is how we play the market. So in other words, you do your market analysis. We just did some, and the overall market analysis is relatively bearish right now, but it's starting to hit some support, starting to transition a little bit maybe. We're going to have to keep watching it and see where it goes. But once we've done our analysis and we have a direction for the market, and we have a good idea which direction trades are going, the next question is, okay, now that I know that the stock's going down, now that I know the crypto's going down, what do I do with that information? Now that I know the crypto is going up, we just looked at it. I just gave you the analysis on Bitcoin. I said, okay, Bitcoin is going down. It's going to hit 72,000. Then it's probably going to hit 60. And then it's going to hit, or 65, I forget the number now. Then it's going to hit 52. Once it hits those numbers, what am I looking for? Or now that I know that it's going down, that's the question. Now that I know it's going down, what am I looking for? What am I going to do with that information? And then when it hits those targets, what do I do with it? And so to answer the first question, if it's going down, you need to apply a bearish strategy. If it's going down, you need to apply a bearish strategy. Now, I'm personally just not a fan of shorting crypto. I've never done it. I haven't really tried because of a lot of reasons. If more people were playing both sides of crypto, I would probably be a very active bi-directional trader in the world of crypto. Crypto is a very unique market. It's very early in its development, and for the most part, the vast majority of market participants in crypto are bullish, and they're buy and hold or buy and hodl. So that really puts, from a liquidity standpoint, it kind of changes the way that I think about it from a shorting standpoint. You can short it. There's different platforms that will allow you to do so, but I personally just wait for the buying opportunity with crypto, and then I buy. And whenever we get to the top and I see exit signals, I take my profits and I move on. And that's the way that I have approached it. And I've never had, except for chasing a couple of meme coins that I let people convince me I should buy, I've never had any crypto trades that I haven't made money on. Never, not a single one. I can't say that about stock, but I've never actually lost money trading crypto. Now, regardless of what you're trading, if you're trading crypto, you're trading stock, whatever, if you see a bearish trend, then your choices are, you have to answer the question, how I play it. And your choices are either I'm going long and I'm buying for a bullish trade, or I'm selling short. Selling short is your bearish option. If you're just trading straight stock, if you're just trading straight crypto, if you want to make money on the downside, you have to sell short. It's the only option. Now, if you're trading stock options, then you open up a complete smorgasbord of trading opportunities. But from a straight, we're just trading stock or we're just trading crypto standpoint, if you're just trading Forex, your choice is long or short. Those are your only choices. Okay. So how do we play it? Well, we could buy, hold, and pray. That's one way to play it. No. We could short, hold, and pray. That's another way. No. What do? We need a strategy, and I'm going to introduce you to a strategy right now that you can do with just long and short. Even if you're not an options trader yet. If you just want a strategy, how do I trade within this type of a market? I only have long and short to work with. So that means the strategy I'm about to share with you will work for stock. It will work for crypto if you're willing to short in crypto. If you're not willing to short, then you just do the long pieces of it. It will work in Forex. It works perfect in Forex. It will work for futures. It works for every market. And the strategy I'm going to share with you is what I call the pivot strategy. So what is the pivot strategy? Well, you already know this. You already know how to do this. You just may not know you know how to do it yet. Okay. Last week, what did we do? We spent the entire week talking about market structure and trends. We talked about support and resistance. We talked about where the buyers and the sellers show up. And then we talked about trading with the momentum of the trend. That was the entire week last week, right? Well, now that we've got the analysis done and we've picked the direction, all we're going to do is apply a trading strategy that looks like trading between the boundaries. I call it trading from pivot to pivot. So it's really simple. If we're at support and we're bouncing up, we're going to buy long. If we're at support and we're bouncing up, we're going to buy long. If we're at resistance and it's pulling down from resistance, if it's coming off of resistance, we're going to sell short. It's that simple. And we're specifically looking to trade from pivot point to pivot point. So let's look at a couple of examples, then we'll go over to our live charts and we'll look at some possibilities over there. Okay, so let's say that we draw our resistance line in here, and this is a channeling behavior that we had in this particular trade, by the way. But let's say we had our resistance drawn in here, it came in around 580, we had our support in here around 480. The idea would be as we hit support and we bounce, so you can see here that we hit support and we bounce, we're going to buy. Now, we're buying as we're bouncing up off of support. That's bouncing up off of a pivot. Where are we trading it to? We're going to simply trade it to the next pivot, which is your next resistance, and we're going to sell. Notice what we're not doing. We're not buying and hodling. We're not buying and holding on for dear life. We are buying at a support, known pivot, as it makes the turn, and that's an important point. As it makes the turn, we're going to ride it up to the next resistance, and we're going to sell. This is a very disciplined approach to trading. The disciplined trader is the profitable trader. The reckless trader is the trader who buys and hodls and hopes for the best. When I talk to most of my crypto friends that are out there buying and hodling, and I say to them, you know, you could be more disciplined about this. You could actually make more money with this. They say to me, yeah, I can't do that. I'm just going to see what happens. That's a gambling approach. I don't want you to be gamblers. Trading doesn't need to be like gambling. We talked about it on day number 1, right? It can be very disciplined, very structured. We're going to buy at support and trade to the next pivot. Okay, so what happens after that? Well, after we hit the next pivot, in this case, it sold back off to support. Now, maybe you purchased in June, and maybe you took some profit, or maybe you didn't. But certainly by September, we get a great buying signal, and we trade it where? Right back to the recent resistance, and we take our profit. Did we lose some? Did we cut ourselves short? Could we have made a little bit more if we held a little longer? Maybe. On the chart, you could have, but in reality, you would not have most likely. Because if you have this idea that, well, when I get to resistance, I'm just going to keep holding it. Well, what will happen is it'll break out. Maybe it hits 620 like it did here, but then it comes back down. And where do you end up selling it? You end up selling it approximately where you were supposed to be getting out. So you really didn't make any more money. I did a very extensive series of backtests on this several years ago, and I tested specifically the profit difference between if I got in at an entry and traded to a target and took my profit versus if I got in at an entry and traded to a profit and put in a trailing stop and let it run. And what I found is consistently over, and I did this with a Forex experiment, but we did it over like 20 different currency pairs. And what I found is over those 20 pairs, and I think we did it like 4 or 5 years worth of market data, if I remember. What we found is we were consistently more profitable like 85, 90% of the time. Very rarely did trading to the target and letting the profits try to run actually end up in more profits. So I'm really a fan of disciplined trading. When you get in at your entry and you get out at your target, it's a disciplined approach to trading. You say, okay, I'm out. Now what happens? Now we're going to wait. And when it comes back and it gives us a new entry, we will buy back at support. And where do you trade it to? You trade it to your target. Now, somebody's going to be sitting there looking at this and say, but, it broke out and look, it went to 700. I know. And if you want to trade that part of the trend, there's a different technique for that. But for this part of the strategy, we're simply trading from pivot to pivot, and we're going to wash, rinse, and repeat. And if you just learn this technique right here, you will be radically more profitable than you've probably ever imagined being before, because finally you're getting discipline in your trades, okay? So let's take another example over here. This is on Alaska Airlines. Again, it's a channeling type behavior. This is not this strategy is not exclusive for channels. It's just really easy to teach it with channels. So a lot of my examples are channels for this. Taking a look at this right here. Notice that we've got support around 58. We got resistance up here near 70. So as we hit support, we hit it a couple times. We make the turn. We jump in. Where do we trade to? Boom. That only took us a week and a half. Okay. We get back down to the bottom, fizzle and fazzle a little bit. We get our buying signals. Where do we trade it to? Our next pivot area. And we wash, rinse, and repeat. Now, there's a couple opportunities to buy on that one there, but that's the easiest way to look at it right there. Wash, rinse, repeat. I would much rather take $10 a share out of the market 1, 2, 3, 4 times, make $40 a share, which is almost 100% on this little bit less than $60 stock. I would much rather take those 4 $10 profits and wash, rinse, and repeat with discipline than buy and hodl and write it up and write it down, write it up, write it down, wondering what's going to happen, watching your emotions go, oh, I'm buying a Ferrari next week. Oh, I can't afford a Pinto. You know, that's just an emotional roller coaster, and it's not worth it. Let's look at some more examples here. This is one on Google. This is a long time ago on Google, but notice your resistance up here around 1,200, support here around 1,025. And again, it's a very simple. We buy at support, we sell at resistance. We buy at support, we sell at resistance. We buy at support, sell at resistance. Now, in a trade that's this big, you also have a lot of bearish opportunities. So I'm going to put in here some different colors. I'm going to put a shorting opportunity. We could have just as easily, after it topped and dropped back below our support, our resistance, we could have just as easily shorted and covered when we got back down to our support. Okay, and that would have been a valid trade as well. In this particular case, that's a $100, $150 a share. Now, maybe you were doing this with options. Maybe you did it with different strategies. But the point is, and the technique is, we recognize the pivot as it's bouncing up off of support. We buy. As it runs up into resistance, we sell. All right, what I want to do now, those are my examples I wanted to give you. What I want to do now is I want to come over to live charts. If you got any questions about that, Jonathan says he's coming from the Cayman Islands. What's up, bro? Man, can I go to the Caymans with you? Are you visiting or you live down there? Let's see. No chat over here on the Rumble side. So if you got any questions over there, you just let me know. We'll try to get them answered for you. Try to check our Facebook feed over here. Got some likes, but we don't have any comments, no questions to answer. All right, so what I want to do is I want to bring all of that discussion, trading pivot to pivot, I want to bring it over into real-time markets with what's going on in the market right now, okay? If you got a stock request or a ticker request, it could be crypto or stock, I don't care. Feel free to bring it up, and we'll look at it. Let's look right now, since I've got it on the screen, let's look at Solana. And I'm going to go through several, this is just all examples that I'm going to go through here, and then we might do some trade setups or something. But I'm going to show you how we approach our trades. This is, notice in Solana, now in hindsight's always 2020. That looks a whole lot like that, I forgot the trade now. Was it Alaska Airlines that we looked at a minute ago that took off? I don't think it was Alaska. I think it was ISRG maybe. But it looks a whole lot like that, right? Where it's just channeling back and forth, and then it suddenly breaks out bigly. You'll notice in here that we actually have a trade entry. If you know what to look for, there's my trade entry. That's what my trade setups look like. Now, early on when we set this trade up, we couldn't see where it was going. All we could see was this right here. So based on historical price movement, that's all we could see right there. Based on historical price and some Fibonacci's, we created an entry as, notice what was happening. It sold off, it hit support twice, it was bouncing back above the average. This is putting it into real time now, okay? This is an actual implementation of how I use this technique in the real world. So we've hit support twice, 1, 2. We're bouncing. We're back above the averages. Averages are all mixed up, starting to cross. And I put my entry in here right around 160. Maybe in 159, but very close in there. As the trade breaks out, my target, you can see I set my target at 200. That would have been $40 per crypto had we gotten there, which eventually we did, but we didn't immediately get there, okay? But we had that drawn in here based on recent swing highs. So our forecast, which I'll put in a different pen color so you can see it, our forecast was to get in at 159 and trade it up to about 200. That was the forecast. Now, we knew that there was a pivot here because it was a known pivot. We knew that 180 could be a problem. But when we set the trade up, that was our target, and our stop was right here in the event that the trade goes the opposite direction. So now we've got a very defined trade setup. What you're seeing now, if you haven't made the links yet, I'm taking the pivot to pivot strategy and I'm moving it into actual trade setup and application. Okay, that's what we're doing here. So if you look at this chart, we peaked up here. We had a double top. We sold off. We touched our support level twice. We bounced. We're back above the averages. That's one of our criteria. Remember, when you're above the averages, buy. When you're below the averages, sell. We're back above the averages. We're looking to buy as it breaks out, moving up off of support. Target 1 is 180. Target 2 is about 200. All based on what has happened before. And then as we move the trade forward and we see what happened, well, we were correct, but it did not get to target 2. It got to target 1. It did not get to target 2. This is very typical. This happens. Okay, don't be shocked. Don't be upset when that happens. You just say, oh, okay, this is trading within the boundaries. We were hoping and kind of expecting for it to get to the higher target. It only made it to the first target. That happens. But what now happened is it started to establish a trading pattern, and it started to establish a better channel. And now you've got real boundaries in here. You can see we ended up with 1, 2, or 3 iterations. And then finally, we had the big breakout right here. Now, once you have a big breakout, this gets into a different theory on trade setups, but I'll just go ahead and kind of breach it with you. Once we've established the channel, which we did all the way through here, and now that we break out of the channel with a strong moving average, a strong oscillator, in this case the stochastic, and we've broken out of all the pattern, this is a new buy entry. This is a buy signal. And again, we're going to trade from pivot to pivot. Now, in this case, we have to trade it different because it was uncharted territory. There was no pivots to trade from or trade between. So we trade that different, and I'll have to talk to you about that in a different series, different session. Once we top this pattern, so Solana came in here and it peaked at 260. It repeated, and then it starts dropping below your averages. Well, immediately you're looking at your recent support. So that would be, if you wanted to short this, you could have shorted it from 220 down to 180. Once it drops below that support, now you start looking to the left at your previous pivots, and there's your grid. That's how you know where it's going. Okay, so that is one example. Let's look at one that we traded a lot. Let's look at Lulu. And I'm using these because these are more, first of all, they're more recent, and they're more, we don't always trade channels. The channel is an easy way to teach trading pivot to pivot, but looking at actual trade setups that we've done with trends is better, because this is the ones that you're really going to do great on. You can see in here our trade setups that we had. We have several Fibonacci's in here. We entered these trades right here on the right side as it broke out of this pivot. So there's your breakout. Notice what we're doing. We're at support. We break out and we trade up to our next pivots. And in this case, all the way to this Fibonacci extension, which got us up to almost 520. That was a trade of $120 a share. Okay, $120 a share. Once we topped, started taking profits up here, we actually did set up. You can see another setup in here that never fulfilled. We were prepared for it to bounce and trade higher. It never happened. So that was no harm, no foul. Once it drops and we had this breakaway gap, which again, that's another lesson to teach you. Where do we look? Well, first of all, it gapped to a pivot. It gapped exactly to a support level. Now we start looking, boom, boom, boom. I've taken a lot of them off here because the chart gets so cluttered, but we traded this entire trend. I think we had 9 trades for this trend, with our first major entry being down here, just under $400, and the bottom of this at $240. Okay, so if you put that together, that's $150 a share. Okay, very smooth. And most of my students don't do this by shorting. You could have done this shorting it, but most of my students do it by using some variation of options. So you're not even really putting that much at risk on the line. And then more recently, when it hit the bottom, so later we'll talk about bottoming patterns and how we knew, but we'd hit support. We're back above the averages as it breaks out of this pivot. What are we looking for? We're looking for it to trade to the next 2 pivots. So you can see my trade setup in here. There was our entry right there. There's target 1, there's target 2. We immediately traded to target 1 pretty quickly. And then eventually we traded to target 2, where we actually gapped over and got to a target 3. Now that one happened with earnings. That's the reason we had the gap there. Okay, but what I'm trying to show you is how we trade literally from pivot to pivot. Okay, now once we just recently topped, you can see some of our more recent trades that we've set up in here. We drop back below the averages. There's our support. We're looking to come down from support. So you can see in here, there's an entry right there, about 351. That was our first entry in this most bearish swing. These are actual trades that we set up on our Sunday night profit picks. Okay, so for some of you, you may follow me there. For those of you who don't, we're doing these before the trades happen. Okay, this is not hindsight. I'm giving you a report in hindsight and showing you how we traded it, but we set these up before the market moves. So yeah, we're timing the market. People say you can't time the market. Well, we do it. Okay, so we enter in here about 351. There was a target there. Here's your next target. What actually happened is we traded past the first target. We bounced, not even coming back to the first entry. And then we continued the trade straight to our second target. We added new setups in here. There was another setup in here if you can't see that. New setups with 299 entry, and we are just pennies, as of yesterday, pennies from our next target on that. That was this past Sunday night. Just set that trade up. Okay, so you can see how we're literally putting into action the philosophy of pivot to pivot. We're moving between the pivots. And when we get to one pivot, we take the profit. When we get to the next pivot, we take some profit. And there's a lot of different strategic ways you can roll this out. Like I say, a lot of my traders like to use options instead of buy the stock or buy the underlying asset. But you don't have to. You can do this exactly the same way buying the stock. You can do it exactly the same way buying the futures or the crypto or whatever it is that you're trading. Okay. Let's put this into action with something like XRP, because a lot of people that I know that are trading XRP just buy it and hodl, and they're confused. Then I'll open it up for any questions Actually, go ahead. If you got any questions, type them in. And by the time they get here, I'll be done with this example. So with XRP, now we did trade pivot to pivot on this, but it was a little bit more difficult because we got into uncharted territory. But I still want to show you what I was looking at. Once we started the move, once the trend really began, which happened down here. If I can get my pen to work. There we go. What happened down here, the trend started to move. It started to move with gusto. This was all known. You can see all the lines I have in here. These were lesser known targets. Now, they were known. We knew they existed because if you come back far enough, which you have to go way back here, these were known targets that we had from XRP from back here in 2021. And once we blew past those, which happened very quickly, we were able to come back to 2018 and pull these targets, these pivots as targets. And that's exactly where we traded to. Okay, that's not a mystery. It's not a mystery at all. So, I got one friend who's always texting me, never takes my classes, never listens to me. He always wants to know, hey, look how much money I made with XRP. Hey, why is XRP down so much? Why is it crashing? It's not crashing. It's trading between the time frames, the price zones. Okay? Now, when you look at this and you look at it through those eyes and you're like, okay, this was breaking out of an all-time high. This broke out. This was the all-time high from 2018. It makes more sense now, doesn't it? You say, wow, I got up to this 330 level, roughly 330, whatever the price was, and I pulled back and I kind of got stuck in here. And it really, really tried, didn't it? It tried desperately to establish 228 as the pivot. It tried so hard. Couple drops below, but you can just see how clearly it was trying desperately to establish that as the pivot zone. And more recently, it just couldn't do it. Where did we drop down to? The other yellow line. And intraday yesterday, where did it drop down to? The other yellow line. Pivot to pivot. The trade is literally moving pivot to pivot. And what I'm going to say about XRP is if this support right here, if all that cannot hold as support, you're looking back at maybe $1. You're looking at seeing XRP lose half its value. Nobody wants to hear me say that because the XRP traders, people who love it, love it. And I love it. I mean, I think it's a great crypto. I love the future prospects for it. There's so much I love about it. However, don't let your bias about the fact you like the project or the idea that somebody, they're going to adopt this to run the Fed system or a new alternative system or whatever narrative you've heard, don't let that bias you into being a foolish trader. Because let me tell you, XRP is one of the greatest trades we've made in the last year. I mean, we went from 50 cents to over $3 and we're able to take some profits. I mean, that's an incredible move. And the truth was most of my cost basis was around 30 cents. So it's a 10x move. I mean, how much more do you want? That's option leverage without buying options, right? But if you're naive about it and you think, well, I'm just going to hodl and eventually it'll come back. Well, that's how you end up buying at 330 and then holding it while it loses half its value. Now, most people, let's be fair. Most people in crypto are buying a few $100, maybe $1,000 worth. So they're watching their crypto bag go from 1,000 down to 500 and they're not freaked out about it. But if you're really smart about your investment and you were to play it out, you say, well, what if I had 10 grand on the line? Well, I would have had 10,000 at 330. When it drops down to, $1.60, $1.70, I'm looking at 5,000. Do I want to have a 50% drawdown on my account? The answer should be no, you don't. And, if you carry this out, the question that most crypto traders have is, well, how could you know? And the answer is, look at the chart. We knew where this target would be. We had to go back to 2018, but we still had structure here. Now, as we break out and we're starting to get into this area of mostly uncharted territory with XRP, as we break out, we have to use other techniques to kind of preemptively figure out where the structure is going to be, but there's still going to be structure. And eventually this strategy, the pivot strategy that I'm teaching you today, will become the foundation of all of your trade ideas, because once we start to expand the grid beyond just kind of the core matrix, but once we really expand it, then it's going to be essential that you have an idea of how this pivot strategy works. So that's why I teach it as the very first strategy. It's why it's the very beginning. And now we've been through it. Now you understand it. All right. That's all I've got to share with you as far as the pivot strategy is concerned for today. What questions or comments might we have? Let me look in here. It looks like I've got a bunch of you hanging out, but no questions coming in. So that means either I explained it really, really clearly, or y'all are just afraid to ask questions. I'm not sure what it means, but it means something. Some of you may be delayed because, these live streams, they delay quite a bit. It's about if you're totally current, it's about a 20-second delay from when I talk to when you actually see it, maybe 25 seconds. But, some of you pause and, you may be watching this later. So if you got any questions on it, feel free to type it in, or you can bring it back tomorrow. For those of you over on Rumble, same thing for you. Same thing for you guys over on Facebook. If you're on Facebook, I don't know. I'm going to be honest. I know that I have people watching on Facebook, but we literally never, ever, ever have any chat. So maybe I'm not looking in the right spot. I don't know how it works. Not an expert in that area. But those of you on Rumble, feel free to message me there, or if you're over here on YouTube, feel free to message me. If you haven't liked and subscribed and followed, then obviously you want to do that, because tomorrow we're going to be live again. Hopefully it'll be smooth. Today was pretty smooth. We didn't have any computer crashes and restarts of the stream, and hopefully we got all that stuff worked out. Boy, what a nightmare that was yesterday. But we got it working smoothly today. If you got any questions, let me know. Feel free to email me, jeremy@trademaestro.com. Jeremy@trademaestro.com. Make sure you spell maestro correctly, Maestr. And if that's it, no questions, then we will call it a day. Thank you for being here. We'll be back tomorrow. Tomorrow, we're going to take it up a whole new level. And I already forgot the topic for tomorrow. Let me see if I can find it. It's a good one. I know it's a good one because I already did the thumbnails for it. I just forgot what it is. But I'm going to tell you because I want to preemptively tease it. So you can be here tomorrow and you know what you're coming for. Oh! Tomorrow is maybe the greatest day ever. Tomorrow, I'm going to give you, using everything that we've learned so far, I'm going to give you a guaranteed formula to beat the market. And I don't just mean beat the market. I mean beat the so-called professionals. So, and this is such a breakthrough. You're going to love it tomorrow. You've heard me share the statistic that more than 90% of so-called professional fund managers cannot match or beat the S&P 500. And tomorrow, I'm going to show you a guarantee. I'm going to show you exactly how to match it, and then I'm going to show you how to beat it using what I've already taught you. It's simple, and every one of you can do it. You want to be here. So all the more reason, like and subscribe and turn on those notifications so you get the message when it says J-Dub's going live. Be there. And I look forward to seeing you tomorrow as I share these incredible secrets. All right. Until then, happy trading to all of you. I hope you have a great rest of your day. We'll talk to you soon.